I think they've affected it in a few ways. One, it's contributed to the depreciation of the peso, which has affected the value of Mexican assets in dollars, so there's maybe been a bit of a reduced demand for Mexican assets. The spreads on government debt and Pemex debt have gone up a bit because of the fiscal dependence on oil revenues. But apart from that, the effects on capital markets aren't that profound because oil is just a small share of the Mexican economy. There's a whole lot more going on in Mexico apart from oil. I think Mexico is a very open capital account, so that non-residents can come in and buy Mexican assets. They can sell them whenever they want. That's an important plus for Mexico because then people can come in knowing that when they want to, for a business reason, take their money out, there won't be any risk of a control put on by the government. And we see other countries in the region that have imposed controls and a lot of administrative measures that really, in the end up interfering with foreign direct investment flows and other capital flows to the country. And then those countries lose an important source of financing for the corporates. So, and Mexico having, large corporations like Cemex, America Mobil, they need to fund themselves abroad. So they would lose if they didn't have that free access to capital markets. I think the Fed's recent decision has meant that there's a bit of a pause for Mexico. Interest rates have been stable. The peso is still trading between 16.5 and 17. But everybody knows the pause by the Fed is temporary. Sooner or later, they'll have to start the liftoff, and the only issue is when. But Mexico, I think, is well prepared for that, especially if it happens in the context of very strong U.S. growth. Well, I think it's a great event to have everybody in one room sharing their opinions on different aspects of capital markets in Mexico. So I was just in a session where major CFOs were talking about how they were going to manage interest rate and FX risk coming up. And it's good to know, A, that they're well managed, they don't see any problems in their own firms, but also it's a lesson for others on how to manage corporate balance sheets safely. So it's a great way to disseminate information, and that in itself will help develop capital markets.